Hey everyone, Ryan Bolton here, local mortgage expert, ryanbolton.com. Today I want to show you some charts I found pretty interesting about what's happened over the last year or so, and going back a few decades on some of the charts that I've got here that just talks about what happened kind of the end of 2022 and what's really happening with the real estate market. So I want to start with some of the consumer reports, some of the consumer trends, price indexes, things like that. So let's start there. This was showing the consumer confidence that weakened towards the end of 2022. So this is the percentage of Americans who thought home prices would go down. So this chart goes clear back to 2010, right during the post 2008, kind of right when we're getting in that mess of the housing crisis. And you can see those percentages were about 17-18% of people thought home prices would continue to drop. Obviously that leveled off through most of the rest of that decade, but look how high it got on this survey, one of the highest they've ever recorded in 2022. 37% of people thought home prices were going to go down. I mean, that's just an incredible number. Some of that came from these reports. Like here's some of the major entities out there that track the sort of data that kind of gets trends and what's going to happen. I'm just blown away by AEI. I've never heard of that one. That's one I just happened to find. But look, they were saying 15 to 20% drop, and way higher than anybody else that was predicting out there. And I think the news media and just the sense of people out there said, well, home prices have been going up like crazy. Rates are now trending. We're kind of coming out of that pandemic. Boy, home prices are going to just tank. We're going to go to another '08. Here we go again, all this appreciation, all this stuff. But I've been telling people for years, what happened in '08 is not what's happening today. Lending is completely different. We'll get into that a little bit later, but it is somewhere it's a totally different market. So here's some of those forecasts. Obviously, the news cycle picked that up. I mean, they want to move the needle. They want to get clicks. They like the fear part of it, unfortunately. And I think it's gotten worse over the last 10 years, maybe even the last 5 years than I've ever seen in my lifetime, because they can just post a headline that's pretty much everybody's reading, just headlines, just quick tweets, that type of stuff. Very rarely do they read the entire article. And the more they get clicks, the more they get likes, the more they get that shared, the more that it shows up and other things show up, advertisement dollars, all that type of stuff starts kicking in. So unfortunately, we're seeing that spread throughout the news more than I've ever seen. It's not real journalism now. It's just opinion. It's just get your headline out in front of as many people as possible. So obviously they picked up on some of these charts. They picked up on some of the data and just the general sense that, yeah, this is, the good times are over when it comes to interest rates. Good times are over, all this home appreciation, and the home prices are just way too much for the normal person to afford it. So they've got to come down, right? I mean, that's just got to be natural. Here's also another chart that shows consumer confidence. Again, people believing that home prices would go down. We haven't seen that number even during the pandemic. You can see on the chart there that there was many times during the survey where it was higher than the pandemic, way higher than the aftermath of the crash. I don't know if this is just the absorption of media or social media or things that just got kind of that fear out there so much more that really drove it down, or people really just thought, well, it's got to come down. It's got to crash. Here we go again, another 2008 kind of thing. 1 in 4 still believe, even after that, but the trend is starting to reverse. You can see that high at 37% back in January of this year is kind of where it peaked. And since then, almost every month it has started to go down. And I think a lot of it is because we haven't seen that crash that everybody thought. So they're kind of starting to realize, well, the worst may be behind us in some sense. Rates have leveled off a little bit. And you look at the data and rates are about what they have been for a 50-year average. They just weren't giving them away like they were a few years back. So they're starting to believe maybe home prices really aren't going to have this massive crash. Some of the other things it was talking about why there'd be a crash in home prices was the idea that there'd be a lot more listings, a lot more homes to choose from. And as there's a lot more inventory, that drives price down because there's a lot more competition. So this was a chart that came out that showed that as this number kind of kept going, it was just going to kind of sky's the limit, skyrocketing. It's just going to kind of blow right through the last couple of years. Now you can see this chart always has a little curve in the summer months. You'll see that there's always going to be more sales in the summer than there's going to be in the other months. So there's always a seasonally adjusted kind of number where it curves a little up during the summer months and then drops a little bit during the fall and the winter. But you can just see, oh man, this is going to blow right past and we're going to have so much inventory. So what actually happened? Here's what actually happened. We actually saw listings and inventory actually go down dramatically. Builders started slowing down. Existing home sales started going down. Foreclosures have gone dramatically down. So there wasn't a lot of inventory being added. In fact, if anything, they cut back on purpose because of all this news and data, and everybody's all the sky's falling, so everybody's like, okay, we're going to pull back. And as interest rates went up, people weren't willing to sell their home or didn't need to upgrade or downgrade or whatever it was. They figured, well, my house payment and my interest rate's so low, there's no reason for me to sell unless you really, really need to. I mean, there's going to be job changes. There's going to be stuff that's going to make you sell no matter what interest rates or what's available out there. But generally speaking, a lot of new homes, a lot of new listings just really started drying up dramatically. You can see it really went well below the last couple of years as far as inventory being added to be able to be sold. So let's talk about that as well. Where are foreclosures? That's one of the things that really led to 2008 is all these people just walking away from these homes they were upside down in, or they didn't put any money down in the first place, and interest rates were actually the same or lower than the rate they had. There's actually a term that was floating around a lot back then called buy and bail. This is where people had good credit, didn't have a foreclosure, weren't late on their mortgage. They'd go buy another house and then just let the other one go because they were either upside down or the rate was higher. They could get a cheaper payment before their credit was trashed. So we saw a ton of that where people would buy and then just let go the previous home, just give it back to the bank. Now that they're in their house, or well, we'll just stay in this house, wait it out. We don't care if it hits our credit for 5 or 10 years because now we got the home we really are going to stay in. And they didn't have really the skin in the game, or they were upside down. We're not seeing that now. In fact, delinquencies on mortgage rates, or delinquency on mortgage payments, is really crazy low and has been crazy low all the way back to about the 2010s. In fact, I saw a report that if you're not closer to 2% of your portfolio in some sort of stage of delinquency or foreclosure, your credit guidelines might be too tight, that you're not out there kind of loaning, or you're not giving an opportunity for people to get into homes. Now, foreclosures happen for all kinds of reasons, not just missing payments. There could be medical issues or a death in the family. There's a lot of things that happen, or rental properties that get destroyed or trashed and the people don't have money to fix them. I mean, there's a lot of reasons why they go into foreclosure, but you're not seeing this huge uptick of delinquencies. In fact, if anything, they're historically low, like crazy, crazy low, because most likely the people that are kind of before this chart had a very, very low interest rate, a very low payment they can't replace with either a rental or a new home. So they're much more likely to stay in the home, keep making their payments. If they're running into financial difficulty, they're going to miss payments on other things before the house. That's why mortgages always had the best interest rates and the best terms, is more likely than not, you're going to make that payment before other payments if you do run into financial difficulties. So that's why it's a lower risk type of debt than other debts that are out there. But this chart just shows we didn't see a wave or a big increase in foreclosures. And I don't think we're going to. I really don't think we're going to see this massive increase, because there's still a lot of value in these homes, a lot of equity in these homes. And the biggest thing is their payment can't be replaced. They're just better off staying, working with the lender, not going into foreclosure, making the payment. They're going to prioritize that over almost any other payment they might have. Car payment might be right behind it because you still got to get to work and do all those things. But those two debts, or people are just not missing their payments on those two things. In 2008, we saw this quote: foreclosure activity is already at record levels, yet as prices fall, foreclosure activity will probably increase or continue to increase. The activity will be literally off the chart. This is 2008. Same report, there will not be a foreclosure crisis this time. This isn't the same thing. It really is not the same thing. Here's also showing the filings of foreclosure. This is all the way back to 2008. You can see that peak in 2010 is really off the charts, like he said. But look how much it's fallen since then, even all the way down to 2021. Now, part of 2021 is the moratorium, even 2020 a little bit into 2022. There was actually a moratorium on foreclosing, meaning it was very difficult to even foreclose. Whether that was a government type thing where they're saying, hey, we're not going to, or even just companies themselves saying, okay, we're going to wait this out. Let's let this pandemic kind of figure itself out. We'd rather keep people in the home. So there was much more of a sense of not flooding the market with foreclosures during the pandemic. It was much better off just saying, okay, we're just going to stop. So that's why you're going to see an uptick a little bit. You're going to have to. But most of the things that caused the moratorium have been lifted, and people can get a job if they need to. And the biggest thing, again, their payment on the house is cheaper than if they replace it. You know, they can't go rent a house for their house payment. They can't replace their house with a cheaper house payment, most likely. So if they have to move, it's a job thing, maybe a family situation. That's really the reason why people move from the existing homes they bought a few years ago. So what actually happened with home prices in 2022? All this fear, all this home prices are going to crash. What actually happened? What are the actual numbers? So this is showing you how appreciation works year over year. This is a 48-year average that shows when homes kind of increase in value the most. What's the normal number? Like, what's normal appreciation? You always hear about 3% a year, 4% a year is pretty normal for home prices. And we've been well above that for quite a while. I mean, that's another reason for some of the fear is like, okay, we can't keep having double-digit appreciation every year without it just kind of crashing to correct those big increases. So it's just showing those months where the home does appreciate or goes up the most. And like we talked about, the summer months are always going to be the months where home prices go up more because they're going to have more people that can or want to move during the summer months. Kids are out of school. It's easier to move. You don't have to load the U-Haul trailer in December. You got the holidays where people want to just stay kind of through the holiday months. So you usually see that uptick kind of depending on what area of the country you're in, somewhere in that February, March, kind of April timeframe, and then a lot through June and July because kids are out of school. Maybe they want to move into a different school district, or they're going from middle school to high school, or whatever that they're doing, or empty nesters, they're leaving for college or they've left and graduated. So there's always going to be an uptick in the summer months. So this is a 48-year average. This is what homes have appreciated over that entire time span. Here's what happened in 2022. Well above that the first part of the year, like well above the normal appreciation numbers. So there's bound to be a little bit of a correction through that, and you can see that. But you can see, I think the worst is really behind us. Any kind of slowdown in the home prices or any kind of flattening has really slowed during those summer months. If anything, it's starting to level off. Here is what's happening in 2023. So that same chart, so you can see that same chart is showing the appreciation. Now let's map it over 2023. So you can see January kind of was low in 2023, and look how much it's actually gone back to normal and above normal appreciation numbers again. So we're actually seeing that homes are actually going up, not down. Here's a bunch of different charts that show from different data points. Now, like say FHFA is more government-backed type data, so they're looking at FHA, VA, USDA type loans, where these other ones are looking at just other data. So the data points are always going to be a little different, but look at how consistent they are with those charts, like how much they're within a few percentage points of each other with the different data. I think I even found Zillow, Black Knight, and Freddie Mac. Freddie Mac is a little more of the conforming type loans, so that's how you come up with those two charts. So remember back when they had the predictions that led to all this fear, led to all the 2022 consumer confidence going to record lows of how, or record high on the amount of people thinking the home prices were going to go down. Look at how much it actually was. Look how off some of these numbers were. And that really is a good thing. I mean, why do we have to make a report sound horrible? And then if it's different, we just try to spin it to, well, it's good that they're wrong sometimes. It's good that we didn't have some of these numbers as badly as they thought. It's not something where it's actually more of a good thing. But you can see this is actual current forecast now versus what it was. So here's something I heard that I thought was really, really relevant to everything. Deceleration of appreciation is not the same thing as home prices are depreciating. So in other words, having appreciation slow is not a crash. That's really what this is trying to say. And just because homes don't go up in value as much doesn't mean they're crashing. It just means there's this slowing. It's a natural part of the market where appreciation was a little hot, and it's good that it didn't completely reverse and completely crash, but it did slow. And that's where I don't think it's the same thing. It just isn't the same thing to have appreciation slowing and home prices actually depreciating. Here's the sales price for existing homes. So this is what's showing year over year. It's actually gone up in most areas. Now the South and West has definitely come down a little bit, but it's still showing that it's not these none of these numbers are a crash. Let's talk about inventory. This is one of the biggest factors on the home price and why it's so much different than 2008. Housing inventory has been an issue for quite a while. I mean, it's historically low. Take a look at this chart. So week over week, we're 1.9% up in our inventory, which is the first time it's really been up for quite a while. But look at what was the same time last year. It was down. We're down 8.8% less inventory now than we were last year. Look at 2019. We're 50%. So we have half as many homes on the market to sell as we did just in 2019. And 10% down from just last year. So inventory has become a major issue and a major indicator of what's going to happen with home prices. And here's existing home sales by region year over year. Overall, the entire U.S. is down 18.9%. You can see the West is down 22% year over year. I mean, look at the numbers here. The South is one of the only ones that's even close, and it's still down 16%. 16% less homes to sell than even last year. I mean, that's a crazy number. And here's the total home sales in the thousands for the last couple of years. You can see every year it's gone down. There's less homes to sell almost every year since 2021. It even goes back a little bit further, but I just want to show you the chart here and how much it just kind of has dropped of how many homes are actually available to sell. It really is quite a crazy number. There simply is not enough homes for sale. The market could easily absorb a doubling of inventory. So we could literally take the amount of homes we have for sale, double it, and we're still well within a seller's market. So this right here shows the change in home prices year over year. It's a 20-city composite, and you can see it has slowed. Definitely has slowed, but it hasn't gone to zero, hasn't gone negative, nothing even close, and you're even seeing that trend starting to reverse a little bit. Here's the month of inventory. This is a crazy number here. This goes clear back to January of 2019. This shows the months of inventory. So how that works is if you didn't add any homes on the market and kept the current sales pace, when would you run out of homes? That's how they figure it. So if you have 4.6 months, you can see the high part of the chart. That means if you stopped adding homes, new or existing homes to the market, you'd run out of homes in 4.6 months. Look, it got down to 1.6 months. I mean, that's crazy amount of buyers versus inventory. And the general consensus is when you're under about that 6-month mark, you're considered a seller's market. That means there's way more buyers than sellers, which means you're in a stronger seller's market as far as price, days on market, things like that. And you can see clear back to 2019, we haven't really gotten very close, maybe 4.6, and we got within 1 month of 6% or 6 months. But we have been a seller's market, a dramatic seller's market, less than 3 months of inventory for a long, long time now, probably the longest I've ever seen. So this goes clear back to 2011. Look at the last time. If you look at the chart here, was at about mid-2012 was the last time we were right about that 6 month. That's just crazy how long we have been a quote-unquote seller's market. Now, that might mean that maybe 6 months was already too long. Maybe a seller's market needs to be moved down to 4 or 5 months kind of thing based on a decade worth of research. But there's been a reason why kind of 6 months worth of inventory or less is kind of that talking point, or that's kind of what everybody has said for years and years and years. And we've been a seller's market for an incredible amount of time. So let's talk about mortgage rates. That's obviously what's affecting the verbiage out there. And as rates go up, that means it's going to have to slow down. There'll be less buyers because there's higher interest rates, that type of thing. So let's talk about interest rates. Right here, this shows inflation. This is a major reason why interest rates had to go up. There's just so much money in circulation between government spending, mortgage loans themselves, student loan debt that was out there, PPP loans. I mean, there's just so much money that was created during that pandemic around the world, and especially here in the United States, that there's so much money chasing less goods you could even get to. With the pandemic, it was so much harder to even get certain things because manufacturing plants had closed, docks were closed. I mean, so many things drove the price up like crazy. We saw a massive peak in the CPI of 8.9%. And the crazy things are some of the stuff that doesn't even track in those numbers. I think like fuel prices are taken out of that. There's a couple things that are taken out of that number, but you can see that's a problem. And that's why the Fed and why interest rates had to go up to slow down the creation of new money, slow down the idea of all this money being created with these lower interest rates, to just slow it down. We had to slow it down before it became just an absolute true nightmare. And you're seeing some of the efforts were a lot slower than they thought. I think they were hoping that this would kick in a little bit quicker, but you can see that trend is definitely reversing when it comes to inflationary numbers. Here's also the average interest rates by decade, just to give you some perspective. You got the 70s, 8.8, the 80s was 12%, 90s, 2000s, 2010s we were spoiled. I mean, we had so many rates that were in that 3 range for almost a full decade that now we're getting back to quote unquote whatever's normal interest rates if you look over the entire life of mortgage loans. Now, I will say the price of homes are also significantly higher, so the impact of a higher rate on a mortgage now is probably more felt than it was in the 70s and 80s with the home prices being less. But it is still something where they were giving money away for years and years and years. Now we're getting back to whatever is more of a normal mortgage or normal real estate market. So here's also to give you some perspective of how inflation worked on the last, since 20 was it 1960? I mean, we're going back a long way on where the biggest spike of that consumer price index and what happened to interest rates during that. So you can see we're off the high. We're off that high point, which means we shouldn't see rates go up higher than what they are right now. There may be some pressure to actually move rates down, but it is something where if you're waiting for this massive crash on interest rates, I don't think we're going to see that for a while because of these numbers. But it is something where we shouldn't see them go up any further. So it is a good time to buy. It's a great time. If you can find a home with the low inventory, it really is a good time to buy. So here's some of my closing thoughts. Inventory, supply and demand is really going to be more of a dictate of home prices than even interest rates, but interest rates should be leveling off. The nice thing with interest rates leveling off, you may have more existing homes starting to hit the market. You may have more people willing to upgrade or downgrade their existing payment for a home. Maybe they need another bedroom because they've had a 2-bedroom, 2-bath, or a 3-bedroom, 2-bath. They really need another home, or they want to move into a different school district or something. They may be more encouraged to do it if rates do come down a little bit. But I really see that there's so much fear mongering, especially 2022, when it comes to home prices and interest rates. And I really feel the worst of that reaction is well behind us. I think it's an incredible time to buy. I saw this report one time, and I use it all the time. I say in my podcast, I say it all the time. The best time to buy a home was 6 months ago. The second best time is right now. So I hope this information was helpful. Please let me know what I got right, what I got wrong, and let me know if you need help with buying a home. I can help you with a real estate loan in Utah, Nevada. Our company's licensed in other states. So if you do need financing in another state, keep me in mind. I can direct you to the right person. But I'd love to talk to you about your specific situation and help you buy a home. So I hope you have a wonderful day, and see you on the next video. So here's some of my closing thoughts. Inventory, supply and demand is really going to be more of a dictate of home prices than even interest rates, but interest rates should be leveling off. The nice thing with interest rates leveling off, you may have more existing homes starting to hit the market. You may have more people willing to upgrade or downgrade their existing payment for a home. Maybe they need another bedroom because they've had a 2-bedroom, 2-bath, or a 3-bedroom, 2-bath. They really need another home, or they want to move into a different school district or something. They may be more encouraged to do it if rates do come down a little bit. But I really see that there's so much fear mongering, especially 2022, when it comes to home prices and interest rates. And I really feel the worst of that reaction is well behind us. I think it's an incredible time to buy. I saw this report one time, and I use it all the time. I say in my podcast, I say it all the time. The best time to buy a home was 6 months ago. The second best time is right now. So I hope this information was helpful. Please let me know what I got right, what I got wrong, and let me know if you need help with buying a home. I can help you with a real estate loan in Utah, Nevada. Our company's licensed in other states. So if you do need financing in another state, keep me in mind. I can direct you to the right person. But I'd love to talk to you about your specific situation and help you buy a home. So I hope you have a wonderful day, and see you on the next video.